Welcome. In this video is Xcn coin target $2. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most striking structures that first catches the eye is the clearly defined long-term descending trend line that has maintained its influence on the chart for quite some time. This trend line has repeatedly suppressed upward price movements in the past and triggered downward reactions at each touch. However, such major descending trends, when broken, have the potential not only to cause short-term reactions, but also to signal possible trend reversals. Looking at the current price action, we can see that the price is approaching this descending trend line and appears to be preparing to test this area. Particularly, the recent increase in volume, bullish candlestick closures, and upward momentum suggest that a strong breakout against this trend line might be in the making. When such significant and historical trend lines are broken, price usually comes back to test that level as support and then targets higher levels. This presents a highly positive technical setup. In technical analysis, the break of these long-term descending trends creates meaningful opportunities, not only for short-term traders, but also for medium and long-term investors. This is because such breakouts confirm a shift in the prevailing trend. Therefore, if the price manages to move above this trend line, it could mark the beginning of a broader bullish move, rather than just a temporary rally. The current signs of recovery in the market structure and the price's approach to this critical resistance line are increasing anticipation among investors. If strong buying pressure emerges at this level, and the price manages to close above the descending trend line on a daily or weekly basis, it would likely trigger a significant shift in market sentiment. If the price then retests this line and confirms it as support, the area could serve as a strong foundation going forward. In conclusion, the breakout of this long-standing descending trend line would be a highly positive development from a technical perspective and would lay the groundwork for the price to shift upward. If the price successfully breaks this trend line with strength and volume, it becomes highly likely that higher highs will be tested in the subsequent move. But we can't make a decision based on trend lines alone. Let's also take a look at other metrics. Stay tuned. One of the most notable formations currently visible on the chart is the inverse head and shoulders pattern. This pattern is typically a strong signal that an existing downtrend in the market is coming to an end and that a potential upward movement may be beginning. These types of formations usually occur after a period of significant price decline and are therefore often interpreted by investors as a reversal signal. The inverse head and shoulders pattern is considered a crucial indication that the market may be transitioning into a long-term uptrend. This formation generally consists of three main phases. First, the price enters a downtrend and forms the first low, known as the left shoulder. Then it creates a deeper low, forming the head, during which more selling pressure is typically seen. However, this low can signal that sellers are starting to exhaust. Finally, the price begins to rise again, forming the right shoulder and encountering an important resistance level, known as the neckline. A breakout above the neckline is expected at this point, which serves as a definitive signal that the price trend has reversed and a strong upward movement is beginning. These types of formations present significant opportunities for investors, as the price often makes a strong upward move once the pattern is completed and the neckline is broken. To measure the potential price move, the distance from the bottom of the head to the neckline is used. This distance determines the target level. Currently, the breakout above the neckline of this inverse head and shoulders pattern suggests that the price may see a substantial rise, potentially moving toward the $2 level. Such a rally is not only a reflection of technical analysis, but also an indication of broader market strength. Inverse head and shoulders patterns are more than just price movements. They are also reflections of market participants' psychology. Completion of the pattern and the breakout above the neckline signal that buyers are gaining dominance in the market while sellers are weakening. If the price surpasses this level and holds above it, it will likely attract more buyers, accelerating the upward movement. When monitoring these types of patterns, we usually expect to see an increase in volume. Volume determines the strength and sustainability of a move, so a volume spike at the neckline breakout is often confirmation that the move is strong and likely to continue. If volume increases during the breakout, it indicates that the upward movement is supported by solid momentum. The target of this formation is based on the distance from the lowest point of the head to the neckline. This acts as a natural target level that potential buyers may aim for once the neckline is broken. These kinds of formations typically offer safe entry points for investors, as the trend reversal becomes much clearer. Therefore, correctly identifying and monitoring these patterns can provide substantial long-term opportunities for investors. In addition, the inverse head and shoulders pattern can signal the beginning of a long-term uptrend. This is especially important for investors to watch, as a completed pattern usually marks a significant change in market direction. Once the pattern is completed and the neckline is broken, many investors may enter the market to capitalize on the opportunity, quickly driving the price toward the target. If the price successfully breaks through this critical level and moves toward the $2 target, these levels will not only serve as short-term goals, but also potentially become major resistance levels that define the market's broader direction. Investors should closely monitor these key levels and reevaluate their trading strategies as the price crosses important thresholds. In summary, the inverse head and shoulders pattern currently forming on the chart suggests that the price is in the process of reversing and could be the beginning of a more significant rally. With the completion of this pattern, the price is expected to reach its target, offering a favorable opportunity for investors. If the neckline is broken and positive momentum develops above it, a rise toward $2 becomes a very likely scenario. One key feature currently standing out on the RSI indicator is the presence of a descending trend. This downtrend has caused the RSI to remain at low levels for an extended period, indicating that the market has been experiencing weak momentum. However, a breakout above this descending RSI trend could be a much stronger and more positive signal. That's because a break in the RSI downtrend indicates that buyers are gaining strength while sellers are beginning to weaken. Breaking this RSI trend often coincides with a similar breakout in price action. Since RSI is considered a leading indicator of price movements, a breakout here could provide an early signal that the current downtrend in price is nearing its end. This breakout could offer investors a new buying opportunity, as a strong upward move in the RSI often suggests that the market could begin rallying swiftly. An RSI breakout is typically seen as a signal that momentum is returning to the market and that a strong upward price movement may be starting in the short term. If the RSI breaks this descending trend and continues to move upward, the market could gain significant potential. Such a breakout on the RSI is often interpreted as a shift in overall market direction, given that the RSI is highly responsive to price changes, and a corresponding upward price breakout becomes more likely. This kind of RSI breakout may indicate not just a short-term rally, but also the beginning of a longer-term positive trend. If a rising RSI aligns with a breakout in the price's own downtrend, it could signal the start of a much stronger bullish move. In particular, this breakout could mark the reversal of previously weak momentum in the market, presenting a highly attractive opportunity for investors. We should wait and monitor the RSI indicator. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.